Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 17th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get on. We've got a lot of economic data coming out. Today, we had building permits came in at 1.12 million units versus the 1.13 million units that it was expected. We also got CPI, which is Consumer Price Index, came in slightly higher than expected at 0.4%, and core CPI came in at 0.2%. Core CPI is basically pulling out all of the really volatile things that make up that data point. So it's usually the one that's more widely looked at for the most part. Anyway, housing starts came in at 1.17 million units, quite a bit higher than expected at the 1.12 million units. And capacity utilization came in line at 75%, but industrial production came in quite a bit higher at 0.7%. I think that's like the highest reading of the year. All right, so that's pretty good economic data for the most part, but the overall market is slumping probably because of the fear of rising interest rates. Another thing to note, crude oil right now up 56 cents, trading 48.28. A line in the sand for the bulls to try and get through is right around $48.70 some odd cents. So that is where the value area high is. So if we get through that, the first stop is probably going to be right here at around $51, and then you could even see $60 if the bulls get it up above maybe $53. It's going to really want to pop to that $60 area. But that is going to act as a major resistance right there at that $48.70 some cents. So keep your eyes on that for crude oil. If we fail that, it's probably going to easily come back down here and go to the point of control for the most part and try and fill in the rest of this. If we rally up here, it's going to probably want to trade up to that 60 area and fill in this blank area here in a back and forth trade between 60 and 50 if we get above there. So that's just something to keep an eye on there. As I said, the NASDAQ/NQ down 16, almost 17 points on the day. The overall market is probably getting a little fearful as to what the Fed is going to do. Again, with the volume profile here, Stottlemyre is what we used to call it on the floor. He's the guy that actually started this whole theory on the bell curves, and this is going to act as support right here at around the 4,333 area. So keep your eye on that. As you can see, it's tested that right there and right on that value area there. So, or that volume node, I should say. Anyway, I've done a webinar on this, or it should be being released pretty soon. So if you want to know more about volume profile, and how to trade that, you can go and check that out at protraderstrategies.com. Anyway, on to the E-mini S&Ps /ES, down about 6 points right now, sitting right on this volume node right here. And as theory would have it, it would want to bounce back and forth. And I've talked about this before. We're going to probably see sideways trend there for some time, and it'll probably fill that in and make a nice bell curve there. Anyway, moving on to the daily chart of the E-mini S&Ps 15-minute breakdown. As you can see from the open and overnight, we've just done nothing but kind of just slide off to the lows of the day. It looks like we're going to test those just a minute ago, but they're finding a little bit of support here. Anyway, on to the trades that I've done. I did General Mills here, as you can see, which is the ticker symbol GIS. Anyway, they just recently rallied up here to test these highs, and again, back to the volume profile. It's right here at support, but I think that it's really going to want to trade back down here to the 61 area. So I decided to take a shot. The consumer staples have done really well recently, and I think that they're due for a bit of a pullback for no other reason than that they've been the ones that have really been rallying the most. So I took a shot on this and went into the June and sold the 67.5 calls for 36 cents. So I'm looking to take about 50% of my max profit on that. So if we get it down here to the 61, 62 area, I should easily be able to cover that rather quickly. On to Newmont Mining. Newmont Mining, as you can see here, just made a new high today. Overall, precious metals, for the most part, have been really rallying today. I think that they are a little bit overdue, as we talked about it. Consumer Price Index showed that there's not really a whole lot of inflation out there. There's no inflation really to speak of. So this was an opportunity. If there's not really inflation, there's no real reason or driver to go into gold for the most part. Overall, interest rates are really low, and I think that the gold and precious metals are due for a pullback, which will affect Newmont Mining. So I have a lot of short positions in the metals already. So I decided to take a neutral to slightly positive stance on this, despite the fact that I'm a little bit bearish. But the beauty in this strategy, which is a front call ratio spread, which I'm going to be doing a webinar on this on Friday, is that if I am directionally wrong and it sells off, I'll still be able to collect the credit that I received for building the strategy. But if it slightly upticks a few points there, then I'm still going to be looking pretty good, because it is neutral to slightly bullish. But because I collected a credit, if it goes down, I still win that way. And I did the June and bought the 35 calls and then sold 2 of the 37 calls. So for every one of the 35 calls, I sold 2 of the June 37 calls. Now, having built that, I'd like it to rally from 35 to 37 and expire right there just below 37, because I'll be able to collect the width of that spread, which is $2, and the 46 cents I got, or that I collected for doing that strategy. Like I said, if it trades off and trades down below 35, then at expiration, I'll still be able to collect that 46 cents that I originally did today. So it's neutral to bullish as a strategy, but I could care less if it sells off, because I'll still be able to collect that credit. All right, that's about all I got for you guys today. Go to protraderstrategies.com and find out a little bit more about the market profile and how you can use that psychology of the market to trade. And you can check out Friday's webinar on the front call ratio spread that I'm going to be doing. I did the front ratio call spread, front ratio put spread last week, so you can also check that out. I've got a lot of good feedback from that. People seem to really enjoy that webinar. All right, if you can't take that, take it easy.